So for more on the outlook for US and European earnings, I'm joined by Philippe Gijsels, Head of Research at BNP Paribas Fortis Global Markets, who's worked in financial markets for over 20 years now. Thank you so much for joining us. So as we were hearing there, Alcoa kicked off earnings season, setting a positive tone, perhaps with profits coming in ahead of projections. Is this somewhat surprising, given the expectation was that Alcoa, being the largest US aluminium producer, would struggle as a result of slowing industrial demand in China and weakness in the US economy as well?
Well, I would say that's something we could expect maybe in the second half. I guess earnings for this quarter overall will be very good. You had CSX also beating on the top line and the bottom line. You had Alcoa better, and I think we can expect more for the rest as well, because we had not too much earnings warnings. So I guess in line with the previous quarters, I also think this quarter will be good. The big question, of course, will be, will stock prices be able to benefit from that? Because you already noticed that after the close yesterday, futures in the US were sharply higher. But in Asia we're down, and also the futures in the US have come down a bit. So it will be the reaction of the markets that's probably key in this matter.
So what does this tell us about industrial and consumer demand right now?
Well, at the moment I think it's fairly good. We also know that the first and the second quarter in terms of economic growth were fairly good. IMF only recently upgraded growth for the first half of the year. You saw that also with CSX. You also saw that they gave a fairly good projection for the next couple of months. So I think at the current time, I think the economy is reasonably strong. But like I said, the big question is what will happen in the second half. And we all know that in the second half, the stock rebuilding will end, the positive influence from fiscal measures will end, and on top of that you will have massive fiscal consolidation in Europe. So the main question is how big will the impact on the economy be, and also on earnings.
Philip, some analysts are saying, and you touched on it there, that the problem for the stock market right now isn't necessarily recent profits. The real focus is on concerns about future earnings, as you were saying, with factors like uncertainty over financial regulation and how it will affect company profits weighing on stocks right now.
Yeah, that's the main question. So you know that all earnings that are reported now are about the past. It's about the second quarter. And all that people care about for the moment is the third quarter and the fourth quarter. And the problem for the market at this moment is that we will not have a conclusive answer on that one before the end of the third quarter and even the fourth quarter. So this means that I think that even though earnings will come in fairly good, that the volatility in the market will continue for a while.
I mean, we've seen, as you say, we've seen a great deal of volatility in the markets during the course of the year so far, and we've had some poor economic data in the US. Essentially, unemployment and consumer spending are not picking up, and a government debt crisis brewing in Europe as well. What does all this mean for the economy on both sides of the Atlantic, in the US and Europe?
Well, that's a big question. It's on everybody's mind. Currently, we have a serious slowdown penciled in for the second half, but not a double dip. But of course, the double dip is exactly what the market is worrying about. And then from time to time, like a couple of weeks ago, you got very weak economic figures from consumer confidence and so on. So the market sold off. Then last week you got some better figures, and then everybody starts to think, okay, things are okay. And I guess we will go back and forth between being hope and fear for some time. And like I said, we will not have a conclusive answer on this before the end of the year. So this means that I think markets will find it very difficult to make meaningful progress over the next couple of months.
Philippe Gijsels, thank you so much.